Hey everyone, James here. Welcome back to the retirement story. I want to start today by saying congratulations. If you're watching this, you've likely spent the last 30 or 40 years working hard, making sacrifices, and watching your 401k grow. You see that balance? Maybe it's $500,000. Maybe it's over $1 million and you feel like you've finally made it. You think that money is your ticket to a stress-free life? But I have to be the one to tell you the brutal truth. You have a silent partner in that account, and they're just waiting for you to turn 73 so they can collect. That partner is the IRS. And trust me, they don't just want a small slice of your pie, want a massive chunk of your life savings. Most people my age think their 401k is safe. But today, I'm going to expose the tax bomb that can quietly steal $10,000 or more from you every single year. I'm going to show you exactly how the government sets the trap, and more importantly, how you and I can defuse it before it's too late. The RMD trap. Uncle Sam is patient. Think back to when you started saving. The government gave you a tax break for every dollar you put in. It felt great, right? But Uncle Sam isn't generous, he's just patient. He let your money grow tax-deferred because he knew that one day he'd get to tax a much bigger pile of cash at the end. This is what we call the required minimum distribution, or RMD. Now, thanks to the new Secure Act 2.0, they've moved the starting age for these mandatory withdrawals to 73. Some people tell me, James, that's great. More time for my money to grow. I tell them, no, that's the trap. The longer that money sits there, the bigger the balance gets. By the time you hit 73, your mandatory withdrawal might be so huge that it yanks you into a much higher tax bracket. You aren't just paying taxes. You're being forced to hand over a larger percentage of your wealth than if you had taken the money earlier. And don't even get me started on the penalties. If you miss an RMD, the IRS used to take 50%. Now it's 25% or 10% if you're lucky enough to catch it fast. That is still thousands of dollars of your money gone instantly because of a simple mistake. The tax torpedo. The domino effect. Now, here's the part that really makes my blood boil. It's not just about the tax on the withdrawal. It's what we call the tax torpedo. When you're forced to take money out of your 401k, the IRS counts every single penny as ordinary income, and that income triggers two massive hits that most seniors never see coming. 1. Social Security taxation. As your income goes up because of those forced withdrawals, it can trigger taxes on up to 85% of your Social Security benefits. Think about that. You're being taxed twice on your retirement. 2. The Medicare surcharge, IRMA. If your income goes just $1 over a certain limit, your Medicare Part B and Part D premiums will skyrocket. You could end up paying hundreds of dollars more every month for the exact same healthcare. Just because you used your own savings, does that feel like freedom to you? Or does it feel like a calculated plan to drain your accounts just when you need them most? How we defuse the bomb. The IRS is counting on us to stay uninformed. They want us to wait until age 73 to realize there's a problem. We can't let that happen. We have to act while we are in what I call the tax planning window. Those years between your retirement and age 73. First, look at Roth conversions. Think about moving money from your traditional 401k into a Roth IRA now. Yes, you pay the tax today, but you pay it while rates are historically low. Once it's in a Roth, it grows tax-free forever. And the IRS can never force you to take a dime out. You take the control back. Second, Use QCD's qualified charitable distributions. If you're 70 and a half or older and you give to charity, stop writing checks from your bank account. Give directly from your IRA. It counts toward your RMD, but it does not count as taxable income. It's a total cheat code to satisfy the IRS without actually paying them a cent. Third, use a bucket strategy. Don't just pull from one account. Balance your withdrawals between taxable and tax-free accounts to keep your income just below the levels that trigger those Social Security taxes and Medicare hikes. My final warning. The government has spent trillions over the last few years, and they are looking for a way to pay for it. Your 401k is their favorite target. Don't let your 40 years of hard work become a payday for the IRS. Go check your statements today. Figure out what your future RMDs look like. And if you aren't sure how to do it, find a professional who actually understands retirement taxes, not just someone who files forms. If you want to stay one step ahead of the IRS and protect your own retirement story, do me a favor. Hit that subscribe button right now. I'm here every week to expose the traps that the banks and the government hope you never find. Next time, we're diving into the inheritance nightmare. How your kids could lose 40% of what you leave them because of one tiny mistake on your beneficiary form. You do not want to miss that one. I'll see you in the next video.